Welcome to Beyond the Press Release, a production of Gorecom, in which we take the time to speak with small cap executives after they put out important news. With us today, does he need an introduction? I don't think so. Sheldon Inwentash, founder, chairman, ThreeD Capital, trades on the CSC under IDK, and for our friends in the US, IDKFF. I don't know, for those new to the story, I guess there's still going to be more of you because ThreeD Capital is doing some amazing things. They essentially invest in disruptive, great companies, and they provide investors with an opportunity to participate in the ground floor in opportunities that they otherwise couldn't do themselves. So, for example, small cap stocks in the very early stages, but beyond that, private disruptive technologies, even digital currencies, things that you'd never be able to get your hands on if you're just a regular retail investor, but you get that exposure through ThreeD Capital. And of course, always, Sheldon's never moved away from his roots, the resources sector. He loves that space. Sheldon, welcome back, my man.
Great to be here, George.
Lots to talk about. You've been on a tear. It seems like every couple of days, there's an announcement that comes out. IntelliBridge, 375,000. Windfall Geotech, 350. ePlay, on and on. So we're going to talk about those. But before we get into those, because I want to know, generally speaking, should investors be reading your frequency of new investments as you being generally bullish on the tech sector?
Oh, absolutely. I mean, this isn't something that is a trade or is a short-term phenomenon. You know, we are in a secular major, transformation, if you will, in technology. And I think that there's been a shakeout, and it shook a lot of people's confidence because things got a bit, hot, if you will. And I think that some of the fundamentals kind of were stopped being looked at. So I think that our view is absolutely rock solid. Where as much capital as we have to invest, we're going to be pedal to the metal, and we're extremely positive in, if I could say, the longer run.
And you're loving the disruptive tech, AI, AR, Fintech, Esports. It seems like you're continuing investing in those trends.
No, absolutely. And what's interesting now is things are snowballing because of the visibility of some of our companies. And, one of the ones that, George, it was the first company you introduced me to, which was, I'll call it Gamble, but Esports Entertainment, which was on the pink sheets in the US and now is on NASDAQ, continues to just absolutely be a star. And I think it is finally getting its legs. Well, I'm chairman of the advisory committee on that, and I've had a lot of visibility. And as a result, our deal flow in the esports arena has just catapulted, and we're seeing a lot of great projects, more to come, some with sports stars. And so this is really what I wanted to do in terms of focus. This is a space that also bridges to other things that we're doing, like a recent investment in a company called AMP, which is a technology that's going to help esports and eliminate the latency. We invested in Windfall Geotech. Well, that basically is a bridge, as you mentioned, the name, between disruptive technology and junior resources in terms of using AI for discovery. So all of this feeds into each other. And then at the end of the day, what I like to do is introduce some of our companies to others so they can create partnerships, because they're great fits, but in the real world, they may never have met each other. And I believe that that's how you truly develop scalability, is through partnerships. And so all of this fits in together.
And there's another great lesson going back to GMBL. I think for everyone at home, there's another great lesson, GMBL. You were able to find, research, do due diligence, and invest in this company when it was on the OTC, right? Early stage. And you were able to pick another winner, and it goes off. It's on the NASDAQ now, trading at some point 10 times higher than the price that you acquired it at. So hopefully for everybody at home, that just drives home the point that Sheldon and 3D Capital find those companies at these early stages when you be way ahead of it and be nervous, and he's able to see them through. Let's talk about some of your favorites that we've talked about before, and then we'll talk about some of the new investments. Peak Fintech, PKK on the CSE, Fintech, lending, China. It just seems like that's a company you discovered a year ago and is absolutely blowing up now in terms of its execution.
Yeah, and I guess maybe a sort of a latency point I'll mention on when you talked about GMBL, but is similar to Peak and some of the others, is the patience one needs to have to hold on to these things. I mean, as we've talked, me and you, we were both extremely bullish on GMBL, but for whatever reason, it took the market some time to discover its potential. And a lot of that had to do is it was a new name. And even though that it achieved NASDAQ, it's not so easy to get into the mainstream of a DraftKings and Penn Central and so forth, Penn Gaming, that it becomes like a go-to stock. And so this takes time. With Peak Fintech, it is just going to have, in my feeling, a monster year. There's a company that is, I just mentioned to you on NASDAQ. It's called Upstart, good name, UPST. Also in peer-to-peer lending, and very, very interesting comparable. They came public, I could be wrong here, 6-8 months ago at $20 on NASDAQ.
Yeah,
they're $145 now. And Kramer was on, they were on a show, and he said, don't sell, this is just the beginning. And as people may know, Peak Fintech is completing a prospectus financing in Canada and then going to NASDAQ. And I believe that once the US audience, which really is a window to Asia and everywhere else, finds out what this company is doing and how it's executing, like, my God, this is just going to be a moonshot.
Yeah, lending platform that's completely reorganizing lending in China and moving it from regional and who you know to a complete lending platform driven by artificial intelligence that matches George Calm over here with Sheldon Financial on the other side of the country. Two of us who normally never would have met, but through AI, we're a perfect match. You get the customer you're looking for. I get the loan I'm looking for, and away you go. PKK, unbelievable things. ImagineAR, IP, our good friend Alan Paul Silverstein there. You found that company, you put your money where your mouth is in the sub 5 cents when nobody was thinking about augmented reality. Nobody was thinking about ImagineAR as a company itself. And now it's just doing deals with some of the biggest names. Today they announced that the AR is going to be incorporated with Grubhub and Megan Thee Stallion, Grammy Award-winning superstar in a virtual concert. They've come a long way from the Erie Otters or whatever they're called, hockey and little baseball teams, right? Another example, Sheldon, of how you found something when nobody else was looking.
Yeah, I mean, to use the phrase, there was a bit of hair on the deal. There were some issues. The lone surviving person is Alan Paul, who's just is the company. He's done a phenomenal job, amazing work ethic, totally focused, and basically deserves the credit. I helped in maybe restructuring management team and the board and providing capital when capital was difficult. Augmented reality is a space people have talked about for years, but this is the year, I've said this before, for augmented reality. And one of the companies, one of your clients, Liquid Avatar is now the name. We made an introduction. It became an instant love affair. And now the segue is, which is really a sleeper, that is to me going to be a killer app at the right time, is the whole area of non-fungible tokens, NFTs. And that, I believe, is perfectly suited for augmented reality. And Alan's figured it out. And certainly working with David Lukash now, I think it's a marriage made in heaven of taking advantage of that particular space. And I am just extremely bullish on ImagineAR. And by looking at the volumes and the quality of the investors now, that, no longer the traders that are approaching Alan and talking about their research they've done on the companies and how they feel lends me to believe that this has a huge amount of runway ahead of it. And, I'm extremely impressed with what Alan's pulled off, but I think the timing is finally right.
You undersold yourself there a little bit, and that's okay. That's like you, but putting $300,000, $400,000, $500,000 into a company, sub 5 cents that needed some help and all that. That's the kind of investment that you're able to make because you have the experience, you have the knowledge, you know how to really figure out a great risk reward scenario, because there's always risk, right? But and for shareholders at home, that's paid off, because look at the net asset value of ThreeD Capital now, $1.27 a share. But when Sheldon was making the investments like these and PKK and ImagineAR, and we're going to talk about Loop Insights in a second, the ThreeD Capital is trading at 5 or 10 cents. If you didn't know how to find these companies, you didn't have to. All you had to do was invest in Sheldon at ThreeD Capital, and you get that lift. And I think that's what people really are realizing. But for all new people coming on, you really need to understand that, because Sheldon does the research and the due diligence you just can't do. And I love to see the impact of that. Loop Insights also is another fan favorite. So let's talk about them for a second, and how you see their future coming along.
Yeah, it's a name that we're just extremely excited about. Sometimes you have to decouple the stock market from the company, because investors got very excited about this company. I believe it traded as high as 297. I didn't realize it was that high. Basically, I guess, overexcited in terms of the valuation for the time. It's come down, it's settled, but the company continues to get wins. Had a tremendous announcement last week on getting Sobeys on a 5-store pilot. People don't realize that, you have to do these pilots when you're large companies. You have to integrate the technology. And to me, was just a massive endorsement of the type of technology that Loop has. And I think that a lot of people initially started just looking at Loop as a contract tracing company that could help in that arena, but that's just maybe 5% of the fundamental solution that they're going to have to digitize the bricks and mortar marketplace. And just the potential there is staggering. And, now that the company has a number of these wins, I'm just presuming that we're going to see some rollout deals. I know that a lot of people now are going to be looking for revenue, and that makes sense. Sure. And that's what, where a company like Peak Fintech is probably 6 months to 12 months ahead of where Loop was, because it already went through that whole phase and now is really having a growth rate on revenue. I think we're going to see the same thing with Loop. So we're extremely, extremely excited about and positive around the prospects of Loop Insights.
Last question on that, and this is more for helping investors at home understand how things work. How do you size up the Sobeys pilot? Some investors will say, it's just a pilot. They're going to throw in 5 stores. It may work, it may not. So we can't really add any, we can't really ascribe any value to that. How do you value that Sobeys pilot? How do you look at in terms of what it might turn into?
Well, first thing, I know how these large enterprises work, and they do an incredible amount of due diligence before they'll enter a pilot. The only reason why they enter pilots is they have to integrate new technology in a live format with their own technology platform. And the only way they can do that is by doing a pilot. And 5 stores is not insignificant. It's not 1 store. And so my feeling is that they're convinced on how this is going to work. Now they just have to get out the growing pains of introducing new technology to their own. And there's always things that have to be adjusted, et cetera. But I'm highly confident that this is going to work for them. And then the rollout is just absolutely probably mind-boggling in terms of revenue and license fees and so forth. I'm not privy to anything there, but I know that when these companies announce something like this, they probably already have it in a store, right, have tested it, And now we're integrating it and feel comfortable, because the last thing they're going to do is put their reputation on the line, because this is a disruptive technology. This is a different way of them running a retail store, which has typically very low margins. So the margin for error is very, very high in terms of the impact for them and their bottom line, and how they're viewed by their customers, et cetera. So I view it as a tremendously positive event. But I think that, I'll call it matrix or loop. In some people's eyes, okay, we know it works now. We want to see the revenue. So I think there's a disconnect in the short run here between investors wanting to see that these are revenue generating deals. And that's where I think the other side of some people who are a bit grumpy need to have the patience. And it's patience. This company is still a young company and is introducing multiple verticals of disruptive tech to a space that really needs it. So I think it's all going to turn out like really well.
Yeah, and thanks for providing that summary. I want to get your angle on how you size up that opportunity, because some people think it's just an audition. Whereas for you, it sounds like, nope, that's a check mark in just the process of a major enterprise, because you're not going to roll out 1,500 stores on day one. You're going to test out in 5 just because you have to be smart about it, right?
Yeah, right. And no, I think it's 100% positive.
Let's talk about some of the new stuff. There's a lot. I'm going to go by size because I could have gone chronological. But Amped Ventures, AMPD, edge computing that is going to help cloud computing for low latency. So for video games, esports, animation, you invested $525,000 there, 3D Capital. What do you see at Amped Ventures that you like so much?
Oh, again, disruptive technology. Something that really is a problem right now for esports as one example. But they're not just in esports, they're going to be in visual effects, in movies, and all kinds of other technologies that, are very sophisticated. And, reducing latency in a video game is everything, and is the difference between winning and losing. So I think this is a company that was just quietly not out there, needed some capital to grow and to get some of the right partnerships, of which we are also working with them now on partnering them with our esports portfolio, of which they really think that there's a great synergy effect potentially with. So we're helping them in that regard, but extremely positive, extremely capable management that have had 20 years experience in the field. And they've partnered with the big guys. They've partnered with NVIDIA, and they partnered with Intel and AMD. So there is respect for their technology at that base level.
ePlay Digital is another one where I think that almost has the feel of ImagineAR. You said earlier, hey, ImagineAR had a little hair on the deal. It needed a little cleaning up, a little help. ePlay Digital, I feels the same way, because I've known that story for a few years. Has had some progress, comes back, never been able to break through, and now here comes 3D Capital to take a substantial position. Do you feel that's the same kind of setup like ImagineAR, where you walk in and just help clean it up, help inject some capital and some structure to finally let it break through?
Well, I think they're different. I don't think it's a company that needs cleaning up. It needs to be a company that needed some capital and some partners, maybe some advisory. They are speaking with ImagineAR, as you mentioned, as a comparable type of company. We are introducing them to others. They've been working with Howie Mandel, the actor, and game host, etc. And they've got 3 verticals that we find pretty exciting potentially, but it's still early days, but that's okay. And we feel that the capital, they've been undercapitalized for a long time.
For sure.
And now I believe this capital and exposure is going to help them accelerate their development plans.
And early days is where you like to be, right, Sheldon?
Yeah.
3D Capital doesn't come to the party late. You're not a Momo player. You're not a FOMO player. You like to be there early.
Yeah.
So I'm excited to see how that plays out. IntelliBridge, you did $375,000 there, a blockchain company that's focused on DeFi, decentralized finance solutions, which most people don't even know what that is, but you better learn. I guess you're bullish on DeFi, and that's why you're making the investment to IntelliBridge.
Yeah, they're going to come out with their own token. They're going to be in the crypto world. They have very serious technology. The company's based over just outside of Paris, so it's an international company. They're going to focus on the Latino market in South America, like Argentina, and they've already have a lot of stickiness, and a lot of bigger companies want to partner now with them and utilize their token. So, fintech, DeFi, yes, all the right verbiage, but a little company to follow.
And finally, there's Birch Street. Now, you did make another investment in Windfall Geotech. We've talked about them before. This is the company uses artificial intelligence to find mines. Maybe see if there's an update there from you. What's new at Windfall before we go talk about Birch Street.
Well, it's funny you say mines. Originally the premise was to find, mines as in gold mines and copper mines and so forth using their tool, their card tool. But now they've expanded into landmines. And that was, a new addition with a company called Dragonfly, which has really very sophisticated drone technology where they can use the drones in combination with the tool that Windfall has, which basically finds iron formations. So they can use that tool on the drone. The drone can go out there and find the landmine. And that is a very dangerous thing. And, many people die per day because of the legacy of all these wars where they're embedded landmines, and more new landmines are being put into conflict areas as we speak. Right. So this is a way to do it on a cost-effective basis because it's very expensive, as well as both reduce the risk of human life in going, finding, and defusing these landmines, as well as obviously a lot of the innocent victims, like children, that are killed every day because they stumble on these mines, not knowing they're there.
And it's a massive market. I didn't realize how big of a market it was. I don't want to quote it, but I remember when we had the interview with them, it was absolutely a massive market. But the other part that I didn't realize, and that's what was great talking to them, is that when they clear out an area, when they can use their AI to predict where most of the landmines, if all the landmines should be, and they get to the point where they clear them out, it creates economic prosperity, right? For in the tens and hundreds of millions of dollars. Because I never thought about that. If there are landmines 2 kilometers down the road from my house, chances are there's not going to be much development going on around here.
I don't think so.
So just a great, they're saving human lives and they're creating prosperity in parts of the world that really, really need it.
Yeah, they free up a lot of real estate.
Another one of those stories where people are slowly going to wrap their mind around it, I think, until it really takes on more and more momentum, which again, you're there early. So if you're there early, everyone at home, you got to be early and take a look at it as well. The last one is Birch Street. This one is clouded in complete secrecy because I think you set a record for the shortest press release in history. Okay. We've invested $500,000 and we've acquired 10 million shares in Birch Street. We've done that by issuing 430 some odd thousand shares of IDK. Boom. That's it. Nothing else. Is there anything you can tell us about an investment of that size? Are you able to share, or were you cryptic for a reason and we just got to stay tuned?
No, it's a private company. It's going to go public. It's part of Mike Frank's stable, and Mike is behind Revive and Digi and a bunch of successful tech and biotech companies. And this is going to be like an investment vehicle, but it's going to be invested in a number of strategic investments like ThreeD, but not totally clear at this point, the direction, but I believe it's probably going to go into crypto. And it's an area that we want to get more exposure to. So it's a startup, but it will be going public here in the coming months.
And last but not least, your net asset value. When you put out for when you put out your last one and that was based on your financials for the year ended December 31st, 89 cents per share in net asset value. Then when you put out your first monthly one for the month of January, which came out mid-February, you're at 90 cents. And now your most recent one for the period ended February 28th, $1.27. So that's great that you're doing a monthly now because we really get a quick snapshot. But how is clearly the portfolio is starting to yield results, right? Because that's NAV for you, and you're trading under NAV, by the way. How confident are you? How great are you feeling about the structure of ThreeD Capital's portfolio investments right now, and how the future looks? Obviously,
I'll speak for greater than the period of a month because, as we all know, we're subject to the market. We've been compared to ARC Financial, for example, and ARC Financial is in disruptive technologies, if you will, but on the scale of a Tesla, where we're on the micro cap. But, we had a correction in the tech space. It just really took the wind out of the sails of a lot of companies. Despite that, we still did good.
Yep.
But the price, we were trading above NAV. We should be trading at 2 to 2.5 times NAV in my experience of how I think this is going to play out. But even ARC went through a substantial correction. So, but decoupling what our share price trades at, I think all the companies that we positioned in are really going to make a lot of progress this year. And when we look at companies like Peak Fintech or Matrix, they become now the senior, or GMBL should be the most senior of all. Yet those companies are all still just beginning their trajectory. But in terms of value, they're starting to get engaged. And we expect that theme to be pervasive amongst a lot of the names that we talked about here today. It's just our business. We get involved at a stage where there's a lot of catalysts to come. They need expansion capital. They need sometimes some help with partnerships and advice, and that's what we do. So we're hands-on in our portfolio.
And that's great that you say that. I actually liked how you said that Peak Fintech, GMBL, even Loop, they're the veterans of the portfolio right now. They've grown up. Last night I was watching, I love this 6-part series on lions in Africa. And you're constantly in the state of, you got the old guard, you've got the teenagers, and you've got the little cubs. And that's what you've got. But your old guard, Peak Fintech, Loop, and so on, GMBL, they're nowhere close to being old guys. I think you got your oldest investments there are teenagers, you can say, still have a way to go. And now you're starting to bring up the cubs behind them.
A lot of growing up still to happen.
Exciting times, man. Great to see you putting your money where your mouth is, just by the number of investments. And we couldn't even go over all of them, but we covered a pretty good amount of your teenagers and your cubs. Maybe we'll use that as a theme from now on. But we covered them. Last words to you on what shareholders, because you're right, there has been a bit of state of flux. I've gone out and told people, never care when the stock price goes too high, never care when it goes too low. As long as the business is intact, you want to remain. Maybe you want to give your last word, some knowledge to shareholders in the small cap space who may be impatient and lose out on great opportunities.
Yeah, I think that I've said this before, understand what you're investing in. And if in fact you're investing in something that you have conviction for, do a sound check every so often and make sure that it's what you think you invested in, and then show some patience. And sometimes the best way to do that is if you have a big gain in something, take your money off the table, put less pressure on yourself because, as I used to always say,
take your capital off the table, your initial investment, not the whole thing.
Take your capital, take your initial investment, take the pressure off yourself and provide some bandwidth so that you can make new investments, because it's sort of like the streetcars. They just keep coming, and there'll always be another one. And the next one will always look fresher and better than the one you're already in. I think you should be cautious, balance your risks so that you're not caught in an emotional state where because you know what, it's a bad COVID day or there's something else that macro wise affects the market, then it affects your disposition. The next thing you know, you sell something that really you just sold because you know you felt that's how you felt emotionally. So understand that, and then if there is something you don't like or you have fundamentally changed your mind, then that's cool too. So really, I mean, there's a lot of new entrants into this marketplace. There's a lot of activity. There's a lot of stories. And you know, all I say is do your own work, do your own research, reference check what you're involved in, try to read as much as you can.
Yeah.
And if you can exercise patience, you'll look back and realize that that was the best way to maximize your returns.
And I'd like to emphasize, if I may, the part about how you said take the pressure off. I had a friend have called me last week who had put $30,000 into ImagineAR around 5 or 6 cents. So he's up 10x. And this is a big gain. He's like, what do I do? I said, look, I can't tell you what to do, but remove the pressure by just take out your initial investment, your $30,000. Take that out, put it back in your pocket. And now it buys you the time to be patient and let Imagine either grow and you keep growing, or God forbid it stumbles, and then you can just take your profits and move on to the next one. And he called me last night and he thanked me, said, hey, you know what? You're right. By doing that, it took the pressure off. I didn't have to think about ImagineAR as an all or nothing. And now I can give it time to grow. So I think that's a really valuable lesson for everyone at home, because that's where you've always made your big gains, right, Sheldon? You don't make your big gains in 1 or 2 or 3 months. You make them in 2 or 3 or 4 years, but you have to have the conviction to stay, do the channel check, like you said, make sure they're on track, but then you stay with it and you avoid the temptation of selling into peaks or selling into valleys just because of pressure, right?
Yeah, absolutely. No, well said.
Thanks for joining us, Sheldon, as always, man. Love these talks. Congratulations on a NAV that keeps rising. Congratulations on some of your investments like Peak Fintech. Great to see that they're going to be graduating up to the NASDAQ. GMBL's already done it. More going to come, and can't wait to have you on next time.
Okay. Thank you, George. Great to see you.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform, to Sheldon Inwentash. Doesn't need any more introduction to that, but he is the chairman, CEO of ThreeD Capital, trades on the CSC under IDK, and for our friends in the US, under IDKFF. For those who are new, and it's going to be a lot of you who are millennials who are really starting to come into the space, do your research. Start off at Agoracom, go to the IDK forum hub there, take a look at their profile, find out who Sheldon is, the kind of success he's had in the past, and then to get specifics about what ThreeD Capital is doing, use the link on Agoracom to hop over to the ThreeD Capital site and keep track of the investments they're making in tech and resources. They update that every month, and also what investments they're making on a regular basis, and hopefully you discovered your next great small cap company. Have a great day. See you next time.